So, ladies and gentlemen, to level up your knowledge, let's start with the first technical session of the day, auditing. It's my pleasure to welcome the respected Regional Council member, CA Ruta Chitale ma'am. Managing Committee member of Pune branch of ICI, CA Rushikesh Badwe sir, and Secretary of Pune Vikasa, Mr. Deven Lunkad, to grace the stage by their presence. I would like to welcome first three paper presenters, Srushti Chandak, Ronak Bam, Mr. Sayyam Babel. On the stage, please.
I feel honored to introduce the session chairman for this technical session, respected CA Ruta Chitale ma'am, FCA Regional Council member and past chairperson of Pune branch of ICAI. She is a practicing chartered accountant since 20 years and holds certifications in DISA, Forensic Audit, Concurrent Audit and Ind AS. She has experience in audits of government companies, listed companies and unlisted companies, large trusts, and multi-state cooperative banks. She has also carried out special assignments for many companies and banks in areas like formulation of standard operating processes, testing of SOPs, risk assessments, preparation of accounts and audit manuals, credit appraisals of major loans, and training of bank officials. She has been a faculty at various forums on varied subjects like formation of trusts and taxation, CARO 2020, and accounting standards. She has made contributions to institute publications, especially in corporation of companies, registration of charges, and a handbook on women independent directors. We feel honored to have you, ma'am. Now I request respected CA Rishikesh Barve sir to deliver his opening remarks.
Good morning. Is it afternoon? Yes, it's 5 minutes past afternoon. Okay. Respected session chairman CA Ruta Chitale madam, respected juries of today, and my dear friends, student friends. It's the first technical session of the national conference and the most important topic of any student, CA student. It's the auditing. Why can you guess why is this the first technical session? Any of you? Why is this the first technical session? Auditing. Because auditing is the core, the domain of any chartered accountant. We as the chartered accountants are known for auditing. We are the only people in India who can sign the financials of any entity, may it be a corporate entity or a non-corporate entity, any trust, any charitable organization, any NGO, a company, a listed company, or a private company. We have the privilege. We are the only people in the country who has the privilege to sign the financials, to audit the financials. Hence, auditing is the core of a chartered accountant and the chartered accountant students. Now the MOCs have, taken a poll or a quiz. I will add 2 more questions to the quiz. Okay? Are you ready? How many standards of auditing are there pronounced by the ICAI? Tell me. How many standards on auditing are there? Essays. Any guess? Standards on auditing? Any one of you? Number of essays issued by the ICAI. 20, 30, 40, 50, how many? Be louder. 50. The correct answer is 46. 46. There is one standard on quality control, SQC. There are 38 standards on auditing and 7 SRS, that is related services, SAEs. So there are total 46 standards pronounced by the ICAI. Now what are these standards going to do? How are they affecting you as a student? That we are going to discuss. Ruta madam is also will be sharing her thoughts. The paper presenters are going to share their thoughts. Just to give you an idea, to brief you, one last question. Is auditing a theory subject or a practical subject? Tell me. Tell me. Is it a theory subject or a practical subject? No, both. Okay, both. How many of you say both? How many of you say theory subject? Yes, there are a few hands. How many are there saying practical, only practical? So theory maybe 10%. 40% are saying only practical, and almost 50% are saying a combination of theory and practice, right? A combination of theory and practice. So we will go by the majority. The audit, the topic audit is a combination of theory and application of that theory. That is very important. So how do we apply? So you first read, you first understand, you first walk through, okay? Then reading, understanding and application. So this application you might be doing during your articleship, during your observation also. So read, understand and apply. So these are the three principles of auditing and the principles of how you convert theory into practice. So I hope all of you are convinced that auditing is a combination of theory and practice, right? So let's go to the paper presenters and listen to their thoughts. I welcome Ruta madam, you also, and she will be sharing her thoughts after the paper presenters' thoughts are done with. Thank you.
Thank you, sir, for adding to our knowledge. Even I didn't know there were 46 standards. I thought there were 720 because that was the last one we did in intermediate. All right. So everyone's waiting for the technical session, I guess. So we begin with the paper presenters. I'd read out the rule. It's simple. Each presenter will be given 15 minutes to present his views, his or her views, and a warning bell will be rung at the 12th minute.
I welcome to present the CA finalist Srushti Chandak, the presenter for this session. Srushti is pursuing her articleship from Kirtane and Pandit. I would request her to kindly present her paper.
Fire that has the power to illuminate the darkest places, ability to reach the wildest corners, and strength to create the greatest impact. We, the students of ICAI, are all set to light up the world with our knowledge, pave the path of our success, and explore the undiscovered opportunities with our wings of fire. The theme of this conference, Agnipank. Good morning, respected dignitaries, respected judges, all the organizers, and my dear friends. I am Srushti Manoj Chandak, a CA final student pursuing my articleship with Kirtane and Pandit. Today I am here to initiate and present the topic of audit documentation. Before I start with the technical session, I would like to throw up some questions which have been continuously running in my mind. Why, in the movie Drishyam, Vijay Sagavkar was not proved guilty, even though the police department knew each and every detail of his case? Why was I always punished at school, in spite of explaining to my teacher that, ma'am, I have done my homework, just forgot the notebook at home? The answer to both these questions is just one word: proof. Unless and until you have a supporting for your saying, no one is going to trust you. This supporting is what we commonly refer to as evidence, and when related to audit, it is known as the audit evidence. Audit in itself is a big task, a huge process requiring days and efforts of the entire audit team. But what if I tell you the audit procedures performed, the audit evidences obtained, conclusions drawn, discussions carried out with management, this all can be presented in just one single thing? क्या ये कौन सा अस्त्र है? सारे अस्त्रों का अस्त्र, ब्रह्मास्त्र. Yes, the Brahmastra of auditing is nothing but its documentation. Audit documentation is of paramount importance in the field of auditing. No matter how much technological or digital we become, but audit documentation is not going to lose its importance. It's like the salt in a cuisine, without which a dish can never be complete. Every auditor is required to maintain sufficient documentation in connection with the audit activities he or she has carried on. Audit documentation is not just a shield for the auditors, but may also prove to be a weapon in times of any inquiry or investigation headed against the auditor. SA 230, the standard on audit documentation, is one of the fundamental building blocks on which both the integrity of audit and its oversight will rest. It deals with the auditor's responsibility to prepare audit documentation in connection with the audit of financial statements. It is to be applied as necessary in circumstances when applied to the audit of other historical financial information. The specific audit documentation requirements of other essays do not limit the scope of this essay, which means that other auditing standards or laws and regulations may provide certain additional documentation requirements that the auditor should comply with. So, do we just start preparing working papers for each and everything in the audit? No. Before deciding to prepare a working paper, the auditor should be satisfied that it is important to prepare either because it will support the auditor's report or because it will provide information related to tax or other statutory and regulatory requirements of the client, or maybe because it is not practicable for the client staff to prepare that working paper. This also indicates that certain working papers needed by the auditor may have already been prepared by the client staff. In such cases, the auditor should arrange for copies of these working papers to be made available to the audit team members. However, it is important to note that the auditor should agree to the form of these working papers at an early stage in an audit and should include this information in his audit timetable. So, a working paper should be typically headed with certain information like the name of client, the subject matter, period of audit, file references, the signature of the preparer and the reviewer. A good working paper should have certain characteristics which include: it should state a clear audit objective, generally in the form of an audit assertion. It should state the full extent of test applied. This will enable the preparer and any subsequent reviewer to determine the sufficiency of audit evidence provided by the working paper. It should also indicate the results of the tests based on the facts documented without any bias. It should be clearly referenced so that it can be filed appropriately and found easily when required at a later date. It should also be signed and dated by the person who prepares it. This will so that the queries related to that particular area will be directed to the appropriate person. But why are working papers so important? Why do we spend so much time documenting each and every bit of the audit? These were the questions I asked my manager at the beginning of my articleship. As a parody, he told me that, Srushti, if you sneeze during the course of an audit, then even that sneeze should be documented. I gave him a weird look, just like you all are giving me right now. And he further explained that one of the major factors that differentiates the big firms with the smaller ones is the concrete documentation that these big audit firms maintain. It is a common saying that not documented is not done. I would also like to quote a very harsh saying in Marathi, which actually summarizes the importance of documenting, which is बाप दाखव नाहीतर श्राद्ध कर. So, working papers are extremely important because they are necessary for the audit quality control purposes. They provide an assurance that the work delegated by the audit partner has been carried out properly. They provide sufficiently detailed up-to-date facts which justify the reasonableness of auditors' conclusions. In all, they increase the economy, efficiency and effectiveness of the audit. They also record matters of continuing significance which are relevant to future audits. Now, let's come to the three parts of our Brahmastra, that is, the form, content and extent of audit documentation. There is no specific rule for which the audit documentation can be maintained. Audit documentation can be maintained on paper, electronic or any other mode. The form, content and extent of audit documentation rests on various factors such as the size and complexity of the entity, the nature of audit procedures performed, the significance of audit evidence obtained, the audit methodology and tools used, the identified risk of material misstatements, etc. However, an auditor should maintain documentation that is sufficient to enable an experienced auditor having no previous connection with the audit to understand the nature, timing and extent of audit procedures performed, the conclusions reached of these procedures and the audit evidence obtained while auditing. It should also state the significant matters arising during the course of audit and the professional judgments used in arising to these conclusions on the significant matters. An auditor should also document the discussions of these significant matters carried out with management and when and with whom these discussions took place. In case if an auditor finds any information that is inconsistent with his final conclusions, then the auditor shall document how he has addressed this inconsistency. Audit process is generally carried out in 5 phases, which are the risk assessment procedures, the strategy, planning, execution and reporting. Documentation is needed at each and every stage in the audit. For example, the auditor may document the risk assessment procedures he has applied, like the variation analysis, the preliminary discussions carried out with management, the business process understanding. The strategy phase will include documenting the scope and direction of audit, the timelines and deadlines for completion of the audit procedures. The planning phase documentation generally includes the pre-audit meeting carried out, allocation of audit areas to the audit team members, etc. The execution phase, as discussed earlier, will include the audit evidences. I'm sorry for the disturbance, there was a power cut-off, but our organizers have lit up the screen again with their wings of fire. Now, let's continue our topic of audit documentation. I was saying that documentation is needed in each and every stage in the audit, such as the reporting stage also includes documenting the financials received from client, a signed copy of them, the audit report, draft and signed copy of the same, and the CARO 2020, if applicable, management representation letters, etc. An auditor should document all his work done and assemble it in a final audit file. The time limit for same is generally 60 days from the completion of the engagement. An auditor generally maintains 2 audit files, the permanent audit file and a current audit file. The permanent audit file records matters of continuing significance to the audits, such as the engagement letter, the other legal documents of clients such as prospectus, sales agreements, memorandum and articles of association, etc. Whereas the current audit file maintains documents that are relevant to a specific audit period, like the audit planning memorandum, the time and budget, summary of audit differences, review points, etc. अब इतना सारा डॉक्यूमेंटेशन पढ़ लिया, समझ लिया, लेकिन ये तो चतुर वाली मशीन की डेफिनेशन हो गई. क्या कोई तरीका है जिससे हम इसे रैंचो की डेफिनेशन में कन्वर्ट करके आसान शब्दों में समझ सके? हाँ, बिल्कुल है. तो भाई कहना क्या चाहते हो? इस सवाल का जवाब देगा कंप्लीशन मेमोरेंडम और सिंपली द ऑडिट डॉक्यूमेंटेशन समरी. Completion memorandum is nothing but a summary of the significant matters arising during the course of an audit and how they were addressed. Such a summary will facilitate an effective and efficient review of the audit documentation. It will also help the auditor to identify any information or any relevant essay objective which he cannot comply with. That will prevent him from achieving his overall objectives of the auditor. Generally, unless and until law or regulation specifies otherwise, the audit documentation is completely the property of the auditor. He or she may, at his discretion, make copies of or extracts from the documentation available to the client, provided that such an disclosure should not undermine the validity of work performed or the independence of the auditor. The retention period for audit documentation is generally 7 years from the completion of engagement. Hence, we can conclude that audit documentation is necessary to achieve the 3 E's in auditing, that is, effectiveness, efficiency, and economy. Audit documentation should be such that the audit partner will be satisfied that sufficient and appropriate audit evidence is obtained just by the mere review of documentation. There is no thumb rule on the format of maintaining the documentation. Hence, each audit firm has its own unique style of documenting the work papers. So, my dear article friends, don't get bored when you are given the task of documentation in your office. Remember, you have an important responsibility on your shoulders. Thank you so much for the patient listening.
We would now call upon Mr. Ronak Bum, CA final student, to present his paper on limitations of audit report.
What are its contents, what are the type of audit report, and how conclusive it is. So, my study seeks to understand how audit report is it conclusive enough for every type of users such as shareholders, investors, bankers, and other type of users. Furthermore, coming to the point of limitations of audit report, I have concluded some of the points which are insights on financial performance, detailed analysis, day-to-day operations. So, auditors have a responsibility to give a conclusion. And the users on the other hand rely on audit report immensely. Like, some of the people have an opinion that nothing can go wrong with a company which has been audited by chartered accountants. So, auditors must be firm and fluent with their work. So, coming to the first point, insights on financial performance. Yes, what actually an audit report is and what work which has been put into an report differs a lot. For example, in the next slide, I would like to show the audit report is just a tip of an iceberg, but what actually audit work and procedure is huge, which is not seeable to the normal public. Furthermore, in banking and financial institution, as per the recent study of RBI, the non-performing assets have been declined to 5.97% in June 2022, right from its highest in 2018, that is 11.50. And this is just because of increase in careful verification of audit reports to the loan givers and loan seekers. Furthermore, I would jump to second point, that is detailed analysis. So, many of us have been through an audit report. What is audit conclusion? Audit conclusion is based upon audit findings and audit objectives. Yes, in an audit report, there are various topics such as key audit matters, other matter paragraph, emphasis of matter paragraph. These are just the conclusions. And what exactly it is and the issues faced by the auditor during the auditing are huge. which are not conclusively presented in an audit report. So this comes under one of the limitations. Can people raise your hand who just gave their inter exams? Oh, this is huge. So you all must be having this confusion in your mind. Key audit matter looks alike, other matter paragraph looks alike, emphasis of matter paragraph, right? So furthermore, day-to-day operations. This is my third point in limitation of audit report. So audit report is just a conclusion based upon year-end position. And a handful of information which is missing in the audit report is just day-to-day operation, which is very important to be included in normal audit report. This could be insightful for the users such as banks and financial institution and investment making, decision making to put day-to-day operation as a part of audit report. Further, what are the ways to overcome the limitations of audit report? There are many ways which are being followed globally to overcome the limitation of audit report, some of which are integrated reporting and extended audit report. So in CA final syllabus, we have integrated reporting. So what is integrated reporting? Integrated reporting is concise communication, which includes governance strategies of an entity which look after value creation in short, medium, and long-term environment. So integrated reporting focuses on financial as well as non-financial aspect. That is sustainability report. So if I tell you what is financial report, it includes only financial aspect based on the basis of present financial position of an entity, and its users are investors and shareholders. On the other hand, sustainability report, for example, CSR activity, which is a non-financial thing. It has been ruled by Companies Act 2013. So if we combine both financial and non-financial aspect, the reporting which comes after is integrated reporting. It includes both financial and non-financial aspect. It focuses on short, medium, and long-term aspect. That is present, future, and past aspect. Also, it has wide range of users, right from the shareholders to the promoters and also the board of directors. Furthermore, extended audit report. Extended audit report is just an extension to normal audit report in which various detailed point and detailed analyses are included, in which, as per International Auditing and Assurance Board, extended audit report is foundation of future audit reporting. There are various benefits of extended audit report. It enhances the user's usefulness. Also, professional skepticism is evolved betterly as work has been done with more magnifyingly and granularly, and more attention by manager to key audit matters. So, reporting is improved. Furthermore, I would like to include that, yes, traditionally, reports which are normally being presented in India are right enough, are at their appropriate level. But the only thing demands is improvement, and improvement such as traditional reports should be ignored, and new innovative reports such as reports like integrated reporting and extended audit report shall be welcomed. Further, all the stakeholders shall be this happy if the contents being provided through audit report is appropriate. There is no doubt in India currently the auditors are working with their best possible ways to provide the users the best and beautiful insights about the audit report. But the nature always demands improvement and dynamism. So I would like to end with a quote that if you resist change, you resist life. Thank you.
Thank you, Ronak, for your presentation. Now I would like to call All India Ranker in CA Foundation and All India Ranker 36 in CMA Intermediate, Mr. Sayyam Babil, to present his paper on audit and public perception.
Hello Pune. Hello Pune. My name is Sayyam Babil and I am coming from Mumbai to present my paper on this wonderful topic of audit and public perception. It's a very informative topic, so for the next few minutes we'll be sailing around on this topic, knowing it all in and out. And as when I'm saying it's an informative topic, it has to be a two-way communication. I would be asking you some questions and having your feedbacks as well. While understanding audit and public perception, it's a saying that audit with a signature becomes the future, past and present of the company. And without it, it's just a piece of paper. Audit is seen with a great respect of the company. Auditor in the current scenario are having many challenges. Audit can find out the importance of the company, providing its strength and weakness. Strength for which the company can work upon, and weakness of which company needs to work on it. If we look about certain media headlines in the past few months, we'll be able to understand why audit is important. Byju's was under suspicion because it was not able to get its audit report signed by Deloitte for the 17 months. You must be wondering that what happened to the most large and the most enhancing unicorn of the country. People are not able to trust the figures. Investors are not able to find this balance sheet interesting. Just because it's not able to get it financial signed, this is the trust, this is the value an auditor is adding into the organization. Auditor BDO LLP, the transitional audit of SREI investment, find out a fraud of 13,000 crores in the SREI investment. In the three financial year 2019 to financial year 2022, this fraud occurred. In the last tranche, the 3,000 fraud was identified. Not just in statutory audit domain, operational audit domain is very interesting. The aviation sector of India has received the highest ever rating from ICOA, just because the proper internal control testing by CAG of India. When we hear the word audit, a very dilute profession and a very interesting profession comes into our mind. What is that profession? What is that degree? I would like to have an answer from, when we hear audit, which professions comes into our mind? Say it out loud, yaar, it's our profession. Which profession? CA, Chartered Accountant. These two words are enough to charge ourselves. This is the value which public is showing. But in recent terms, in recent time, some corporate failures and public scams have raised a question mark on the roles and responsibilities of the auditor. Public distrust have been having against the auditors, whether it may be a ABG Shipyard scam of 23,000 crores, ILFS scam of around 11,000 crore, or PNB scam. The role of auditor is under a question mark. And public perception towards it's very distasteful and the wrong manner. Auditors are not only being fined the failure of market, but as well as are culpable of economic failure as well. The noise is high and the consequences are undetermined. Auditors are not only facing class action suits, but it has led to ban of many big firms as well. Many big fours and many Indian firms have been banned from auditing in India. The situation is intense and alarming. But my answer to all this question is very simple and straightforward. The presumption of innocence is a basic constitutional right, and it's acquired equally to auditor as well. When there is a corporate failure and audit failure, there is a thin line between them. And the line is very blurry that people are often considering corporate failure as an audit failure. Auditors are being blamed for not even this corporate failure. There is no differentiation between a financial disclosure failure as well as business failure. Auditors are on the front line of the fire. If I talk about this baseless allegation, auditors are said that they are the watchdog, not the bloodhound. Audit can't be started with the method of detection. We are here to verify. We can't take up the role of detectives. Auditors in the recent areas have very clearly said that there is a very minute chance of misstatement in the financial statement. As per the report of ICAI, only 2% financial statements are happen to be misstated. But still, there has been a lot of noise in the market. We have to understand, you just can't throw away the baby with the bath water. There's a lot of multidisciplinary function in the environment, like internal auditors, independent directors, banking and credit rating agencies. It's a whole ecosystem, and the auditor alone can't be blamed. Me, myself, working in the audit domain in my articleship, can take the liberty to bust some common myths about the audit. There are a lot of misconceptions about the audit. Like many people see, audit is just a tick box testing and it increases the workload of the management, which is absolutely incorrect because auditor from their vast experience can provide many inputs to the company. Today, the investors and managements are trying to see across the audit opinion and audit file as well. They are not only seeking opinions, but they are seeking validations from the auditors on their internal controls. Auditors also check the internal controls of the company, which give them a wide perspective on the company. There are many benefits which auditor provide rather than just a statute compliance. Auditor assesses risk of material misstatement. That is one of the most common practices in India. It's help in fraud prevention and detection. Whenever any fraud happens, it's the forensic audit that comes into a picture. Auditors provide many ways and many options which can reduce the cost of capital of the company. Not only these, there are a lot of misconceptions as well, that audit isn't a very exciting career path, which is absolutely incorrect because auditor in their general parlance audit many industries and many domains, which provide them a very interesting career paths widening from a range from cosmetics to a fast-moving consumer sector to aviation sector as well. Auditors spend most of their time crunching their numbers, which is again incorrect because auditors meet top executive of the company. They roam around in the company sites and understanding the day-to-day business of the company, which is far away from just number crunching. Auditing is mostly a desk job. It's incorrect. In fact, I would like to say my desk is my backpack. I can take it wherever I want and whenever I want to work. It's not just a desk job. We roam around in the company. We interact with a lot of people. We have meetings. We check internal controls. We check stocks as well. So it's no more a desk work. Another misconception is auditors do not have a work-life flexibility. We often joke around that even a late night, midnight call is working on. It must be an auditor auditing a company. It's again incorrect. If you are liking anything, if you are fond of anything, and you are working it, then I don't think so there would be any work-life balance against that. Audit is just a multidisciplinary subject that not just a paper, but a whole book can be written on it. But due to time constraint, I would like to wind up my thoughts here. I hope I have provided justice to this topic. Thank you.
I think for most of us who have given their intermediate exams right now, one question which we are all posed with every other time is in what domain do we start our articleship? And at least after this technical session, now we know what audit has to offer. Moving on to, I'd request CA Ruta Chitre ma'am to give her concluding remarks.
A very good afternoon, and again, I am here to talk to you all. First of all, let me congratulate all the three paper presenters, Samyak, Ronak, and Shruti. Really, it was a very good insight into what exactly the process is. Even documentation, reporting, and perception. Really a very thought out, good points, good insights into a very critical topic, I would say, about auditing. Rishikesh started with the note that yes, we need to read, then we need to understand, and moreover, we need to apply in auditing. But I would like to tell you about my take on auditing. I believe that auditing has three C's, three important C's. One, that is common sense, not so uncommon, but really common sense is required. Second is competence, technical competence, to know and understand and apply audit. And third, and not the least, is curiosity. Curiosity is one of the factors which will really make or break the audit. Now, how do I make, as a session chairman, I need to understand and sum up what all these three people have presented. So let me tell you a story. See, India is a land of stories. And I think that the point will be very clear if I tell you a story. See, there was one day when Badshah, you know Birbal and Badshah. So Badshah was standing on a balcony and he was just looking at what's all happening around. Suddenly the Begum comes and starts nagging him that you are always favoring Birbal, why you are doing this, what about my brother? And Badshah is really piqued. He says, okay, fine, call your brother. So the brother comes and the Badshah says, okay, tell me what's happening down, who are these people, what these people are doing, what are they carrying? So the brother runs, goes there and finds out. He comes running again to Badshah and says, Badshah, it's a very good high quality rice from Punjab. So Badshah says, okay, what's the cost? So then the brother again goes back and comes up and says, it is this and this price. Then the Begum is like, okay, look how strong and how smart my brother is. He's getting all the information. Suddenly Birbal enters and Badshah is like, Birbal, why are you late so today? You are so late. Why are you so late? So Birbal says that while coming, I saw that there were some bullock carts on the way and they had a lot of bags. So I inquired, see, curiosity, he inquired that what are these bags? So the people said that this is some rice which we are carrying for trading. So then the Birbal says, checks it, then he understands that this is really a top quality rice. Competence. So he checks for himself that yes, good quality rice, asks what is the price, then he bargains. Birbal says, Badshah Sahib, I bargained for this particular rice and being a very top quality rice, I could arrive at a good price. And now checking the stocks, checking the EOQ, checking the minimum order level, I have ordered multiple quantities of rice. And now you are seeing all these people carrying the bags to our state government godowns. So Badshah listens and says, I feel that you must be a chartered accountant, right? So curiosity, competence, and common sense are the three things which are utmost required not only for a chartered accountant, but to do the audit, our most important area that is associated with us very correctly, very practically, and so that we really prove ourselves to be partners in nation building. So thank you very much, all of you, for having listened to me. Thanks.
Thank you for your insights, ma'am.
I welcome CA Rushikesh Badwe sir to felicitate the session chairman, CA Ruta Chitale ma'am.
We request Student Coordinator, Mr. Manmant Shevarkar, to felicitate the paper presenters. Now I request Mr. Deven Lunkad, Secretary of Pune Vikasa, to propose the vote of thanks.
Hello guys. Firstly, how are you all? मजा आया? जोर से? Okay. So I'm sure you must have learned a lot of things from all the fellow paper presenters. So firstly, I would like to thank CA Ruta Chitale ma'am, CA Rishikesh Badwe sir for being on the dais, and of course paper presenters for sharing lots of insight with us, which will definitely help us in articleship period and even beyond that. So the way Shrishti brought the humor in her paper presentation, and the way Sayyam brought the perception we have about the auditor, and the way Ronak brought the kind of relevant content which is absolutely needed for the during the audits. It is really remarkable, and being worked in the audit domain, I know that it is ever-changing field. I'm reminded of the quote by Charles Darwin. Charles Darwin once famously quoted that it is not the most strongest nor the most intelligent species which survive, but the ones who are the most adaptable to change. And I think the audit is the domain which is ever-changing, and the way this thought is brought by the paper presenters is really overwhelming. So. And lastly, I would like to thank all the audience to listen this very patiently. You are really a good listeners. The whole Pune Vikasa team for making this happen. And moving further, I would like to dedicate one shairi for all of you. So, would you like to listen? Yes. So, it goes this way that, so चांद भी चमकेंगे तो क्या बात बनेगी? सो चांद भी चमकेंगे तो क्या बात बनेगी? आप लोग आए हो, अब ये कॉन्फ्रेंस की रात बनेगी. Thank you so much all. Thank you so much.
Nehal
And I, Pallavi, invite you to the technical session.
Pallavi, I have a question for you. ये contingent liability तो बहुत सुना है. ये contingent asset क्या है?
You know what? I'll give you an example. Let's assume there's a company ABC which has filed a lawsuit against company XYZ for infringing a patent. And there's a decent chance that that company will win that case. Then it's said to have a contingent asset.
Oh, So, does that mean we disclose it in our financial statements?
No, that's where you're wrong. As per AS 29, you should disclose it only in the Board of Directors report.
We are sure you have already guessed what the next
session is all about. Yes, you are right. It's accounting standards.
We would like to invite the eminent CA Ashish Khandelwal, the former member of Expert Advisory and the Research Committee of ICI. Respected CA Pritesh Munot, the Secretary of Pune branch of ICI. And Mr. Taha Merchant, the Treasurer Pune branch of Vikasa of ICAI.
We would also like to welcome our paper presenters for the session, Mr. Trishant Goyal, Mr. Yash Chaudhary, and Ms. Khushi Vyas. We would now like to introduce our esteemed chairman, CA Ashish Khandelwal, sir.
He has been in practice for 27 years and leads audit and assurance practice at Shah Khandelwal, Jain and Associates. He has been a member of the Committee of Public Finance and Accounting Standards for local bodies of WIRC for 2019-2020. He has been an executive board member and treasurer of British Business Group, Pune.
He has also been the chairman of Pune Midtown Roundtable 65, an organization which has built several schools for the less privileged students in and around the city of Pune. He has helped startups and multinationals to set up their operations for the first time in India. He has conducted audit of companies, banks, insurance companies, partnership firms, trusts, etc. He has also conducted internal audit assignments of manufacturing and software companies.
Sir has also managed several large engagements in India and internationally across diverse industry verticals like financial services, IT, ITES, manufacturing, retail, etc. He has pioneered the setting up of outsourcing practice in India and was awarded the Best Indian Outsourcing Practice by Corporate International UK. Can we give it up
for our Honorable Session Chairman, CA Ashish Khandelwal. We would now like to invite CA Pritesh Munot to give the opening address.
Thank you. Good afternoon, everyone. It's my great pleasure to see you all here. I welcome you all for the National Conference of CA Students 2022, and it is driven by the theme Agni Pank. I would like to take this opportunity to thank all my Vikasa team. They have done a very wonderful job. I guess last 15 days they are working very hard for this conference, for making this conference at last success. So I would thank all the Vikasa team members for organizing this wonderful conference. Also to all the participants who have come from various cities. I would like to welcome our today's session chairman, Mr. Ashish Khandelwal, sir. Many of you knows him very well. बहुत जनों ने आर्टिकलशिप किया होगा उनके पास और बहुत जनों को रिजेक्शन भी आया होगा आर्टिकलशिप में. But I welcome Ashish sir Also, I'd like to welcome our all paper presenters, Trishant, Yash, and Khushi. Topic of today's session is, I guess, very much important, I feel, because it's the heart of our curriculum. And the same way, though there is a big diversity in the businesses throughout the world, but we speak only one language, which is very common, and that language is accounting. So I feel today's the session is very much important, and we are going to learn the standards of that same one common language of accounting. So I welcome you all again, and keep learning, keep sharing. Thank you so much.
Thank you for your insightful words, sir. We would like to introduce our first presenter, Mr. Trishant Goyal. He is a CA final student and is pursuing his articleship from Nanjia and Company LLP in the field of forensic and risk advisory. He has a keen interest in accounting and finance and has also volunteered in various ICI events. We would like to invite him to present his research paper on the topic cash versus accrual basis of accounting.
Hello Pune, myself Trishant Goyal. I would like to present my paper on the topic cash versus accrual basis of accounting. So my dear friends, the theme of the conference is Agnipank. You know what is Agnipank? The book written by Dr. APJ Abdul Kalam, The Wings of Fire. According to him, there are three things we need to have success in our life. First thing, desire. Second thing, destiny. And third thing, expectation. If we have all these things together, we can be great successful. Now, three things are written on the board: cash, accrual, and accounting. Now, so you must be thinking, what is accounting? What is cash basis? And what is what is accounting, what is cash basis, and what is accrual basis? So all your queries will be cleared by me only. So let's see what is accounting. Accounting, as we studied in our class 11th, class 12th, CA Foundation, the definition: accounting is the art of recording, summarizing, and classifying the financial data, and in terms of money transaction events and in part thereof. But you know, it is the definition given by AICPA. What is AICPA? Association of American Institute of Certified Public Accountants, which is similar to our Institute of Chartered Accountants of India. But this is a technical definition, and you might be thinking, समझ सा नहीं आया कुछ, थोड़ा easy terms में बताओ भाई. तो आओ बताते हैं accounting क्यों आई, कैसे आई, और क्या होती है accounting. So why accounting? Let's imagine you all are doing a business, and you are doing a business for money, for cash, for the profit. But you trade. At the year end, you didn't get the profit or didn't get the results. You are saying, यार मैंने तो काम किया था, पैसा कहाँ है? पैसा तो दिख रहा है, पर profit है. और income tax department will ask you, oh, you earned some profit, pay the tax, bro. Oh, I haven't recorded the same. So here what accounting comes into picture. It helps us to analyze the transactions of our business, to record all the expenses, all the incomes, and show the true picture, the profit or the loss we have incurred during the year. So now you have known what is accounting and why accounting is introduced. But you know, accounting is not just it emerged on one day. Oh, now accounting, you have to do it. No. There's a road map of history. There is a history of accounting, and let me take you to the road map. So earlier, we all were cavemen. We used to kill animal and take the food out of it. Also, there were other peoples on the other side of the land who also killed the animal. Let us assume I was killing an elephant, but the same person is killing a sheep. Now, one day we all met and we are like, oh, you are killing the sheep. You have sheep meat. Oh, I have the elephant's meat. So let's trade. And here comes the barter system. The trading started. And once trading started, the need of accounting comes into the picture. First, the book of accounting, the book of double entry system was written by Luca Pacioli in 1495. So he was known as the founder of accounting. And then year on year went, and we came into what we see today. Hello. So year on year went, and we came into picture the modern accounting we are doing currently. The accounting for which the Institute of Chartered Accountants of India was introduced. Now, I told you what is accounting, why accounting was introduced, and the history of accounting. Let me just take you what is cash basis of accounting. Now, cash. For you, cash may be rokada, cash may be money, cash may be currency, or the green notes. But you know what? Cash basis of accounting is just the practice of recording the revenue on the basis of happening of cash transactions only. There is no entry for the credit transaction in cash accounting. Cash accounting is only used for the businesses, they don't have any credit transaction. You went to a shop, you pay him 10 rupees, take a chocolate, and then that's how the accounting is done. He records 10 rupees in its book. It is as simple as that. But when to use the cash basis of accounting? You cannot use cash basis in every circumstances. You need to understand that cash basis is only allowed or is only appropriate in few of the cases. First, if you have a very small business or a sole proprietor business. If you have a very small business, you can just run the business on the cash basis because you don't have any cash credit transaction. Let me just ask you a simple thing. When you go to the grocery wala bhaiya, do you ask him, bhaiya udhar de do? No. You just pay him 10 rupees, take the goods, and that's how it is as simple as that. Second, business operating without the inventory. If your business doesn't have any inventory, there may not be any sale or purchase. Just like the service industry. When you go to a auto wala bhaiya, you pay him the money and reach to your destination. So there also, cash basis of accounting is very useful because he can record all the cash transactions and just simply say, this is the profit I have earned during the year. Now third point, cash only business. Your business is only cash basis. You say, I don't accept any credit. Now it is your choice. If you don't want to accept credit, then okay, you can use cash basis of accounting. So I told you what is cash basis, when to use the cash basis, but you know what, there is a sad phase too is also. Cash basis is not always appropriate. There are some downside to cash basis. First of all, it do not present the accurate picture of the company. Let me just tell you with an example. If you have a machinery of 50 lakh rupees, you purchase in the year, now you don't use credit accrual basis. So you will not account for the depreciation of that machinery. You would simply say expense 50 lakh machinery. And let's suppose during the year you have incurred 1 lakh, you have earned 1 lakh of the revenue. So you would say 1 lakh of the revenue, 50 lakh of the machinery. Oh, my loss is 49 lakh. No, it is not like that. Your loss is not 49 lakh because you are going to use the machinery for at least 10 years, 5 years down the line. So you will get the revenue, you will get the cost of machinery distributed on the same, where comes the principle of depreciation. Second, you may lack accuracy surrounding assets or liability. The same example, you record the machinery for 50 lakh in the books, but you didn't deduct depreciation from it, and year on year, after 10th year, the machinery is still standing at 50 lakhs in your books. Now you are like, oh, the machinery is 50 lakh, but when you go into market, you will not even get 1 rupee for the same. Because if you have accounted for the depreciation, you would have get the true value of that machinery. Second, it is not useful for the crucial details of the business. Some of the crucial details, just like goodwill, trademarks, patents. So these are generally goodwill. Self-valuated goodwill is not allowed. But when you go for partnership, when you go for company, and when you go for sale of your portion of the business, then you will need to calculate the goodwill. And now since goodwill is non-cash, you will say, oh, it is non-cash, I will not account for the same. It is not right. Now cash basis is also done, accounting also done, but here comes the hero of our movie. Accrual basis of accounting. The accounting we all have studied from class 11, class 12, CA Foundation, Inter, and Intergroup 2. Also we are studying in CA Final. So it is basically the practice of recording a transaction as and when they occurred, irrespective of the cash flow. If the cash flow is not, then also we record the transaction. It supports the matching principle. What is matching principle? So it is the first thing we have studied in class 11th. जिस साल का खर्चा उसी साल में डाल दो, जिस साल का profit उसी साल में डाल दो. So the profit and the revenue and the expense should match. It is the matching concept with the year in which it incurred. Third and the foremost thing. Third thing, cash basis has a downside that it doesn't show the full picture of the business, but accrual shows the full picture of the business, because we depreciate, we book all non-cash expenses, we book all prepaid, we book all outstanding expenses. So with all of these getting accumulated, we get the true picture of the business which we are looking for. Now, when to use cash based accrual basis of accounting? So it is as simple, जहाँ पे cash नहीं लगता वहाँ accrual लगा दो. First of all, use for larger businesses. Reliance, Tata, they cannot say we will be using cash basis because it is easy. But, bro, it is easy. But you know, your organization is very large. You need to make some credit transaction. You need to make some prepaid. You need to take some loans. For all those things, you need accrual basis of accounting. Secondly, when accepting or making credit payments. Now, if you must have shop on eBay, Myntra, Flipkart, Amazon, and use your credit card. So when you use your credit card, you cannot say cash to abhi gaya nahi, now mera to kharcha nahi hua. No. Since you use the credit card, you need accrual basis. You have to pay that cash in future. You may need to pay the interest on the same in the future. So accrual basis is also useful for that. And it gives the full track of assets and liabilities. Oh, I have this much, 5 lakh of asset, 2 lakh of liabilities, then 3 lakh is my capital. You will get the true picture there. Now, as cash basis, accrual basis also have some downsides, and due to which the Shinchan is sad. First of all, it is very complex in nature. Why it is very complex? You need to understand the timing principle. You need to understand the interest rates. You need to understand the present value factor, time value of money. You need to understand all the financial management principles to record the transaction at the current amount. And it is very complex. You need to study for the same to understand what amount is to be recorded. Secondly, it consumes a lot of time and money. You cannot say, oh, I am graduated, now I can record the transaction. Okay, you can record the transaction, but to analyze the same, to analyze the profit is happening or not, you need to hire a professional. And that professional, yes, my dear friends, you are the professional chartered accountants. Secondly, last point, it indicates presence of profit even when there no cash flow. Now there is a problem. You say, I have earned revenue of 50 lakh, but all that revenue is in credit. So at the year end, you don't have any cash to spend. Your company will be on the cash losses. So that cash, so if there is no cash, then your balance sheet will be showing the profit, but it is not there. So for that, we make cash flow statement to show that yes, we have the cash flow. And last but not the least, I will tell you a small example to elaborate what is cash and how cash basis and accrual basis and how the accounting of the same has been done. So let us assume a company sells 10,000 rupees of the goods to a customer in March and raise the invoice in April. So under the cash basis, the sale is recorded in April, and under the accrual basis, the sale is recorded in the March. So now 3 points are covered. Last point, legal requirements. Are there any legal requirements regarding cash or accrual basis? Yes, my dear friends, there are no legal requirements as such, but you need to have some careful points. Income tax department says for salary, capital gains, house property, you need to use mercantile basis. Salary, tax on salary is to be paid when it is received or received or accrued, whichever is earlier. And for house property, the same is there. So income tax department doesn't say use cash or accrual. They say just follow one principle and take it and follow it year by year. Secondly, there is Ind AS. Ind AS 1. India's one specifically says that accrual basis of accounting needs to be used. But thankfully, India's is not applicable to all companies. They are applicable to some big companies only. Then the bottom line is, you use cash basis or accrual basis. It is your choice. You use either of them, but depending upon the business. If you are doing a small business, you can just follow cash basis. But the same cannot be done for the big business. You need to use accrual basis. This is Trishan. I thank you so much for being such lovely audience.
Thank you so much, Trishan. It was really nice revisiting the base of accounting. Now on to our second paper presenter, Mr. Yash Chaudhary. He's also a CA final student and is currently pursuing articleship from B. Kabra and Company, Pune. This is his first time participating in a CA conference. We would like to invite him to present his research paper on the topic, Are Accounting Standards Really Required?
Are accounting standards really required? To answer that question, let me ask you, why we need rules or regulations or guidelines for anything, not just for standards? This is the second one. This is another. Done? Are accounting standards really required? To answer that question, let me ask you, why do we need rules, standards, or regulation for anything else? For example, for traffic rules. You are living in Pune and if you have a vehicle, chalan to kata honga, right? So if there is no traffic regulations, then this will be the situation. Traffic jam hi jam rahenga or accidents will be more. And why do we need rules in office? If there are no rules in office, then there will be confusion regarding reporting and there will be chaos. So coming back to my first question, why do we need standards, accounting standards? The answer is simple, to maintain order and reduce confusion. Good morning, Pune. My name is Yash Chaudhary. I am from Orange City, Nagpur, currently working in B. Kabra and Company, Pune, standing before you to present why accounting standards are really required. Concept of AS. As we all know, GAAP provides aims at uniformity and comparability. But the same GAAP provides multiple ways to treat a particular transaction. This can create confusion and there are chances the intended users can make wrong decisions. So there is a need for a particular standard so that there is a need for particular standard to regulate it. Meaning of standards. We are all well versed with the meaning of accounting standards. Accounting standards are the written statements which consisting of rules and regulation which are issued by accounting institution for the preparation of uniform and consistent statement and also for other disclosure affecting the different users of accounting information. It deals with 4 things, that is recognition, measurement, presentation, and disclosure. It deals with recognition of transaction of event. Second, it deals with the measurement of same event and transaction. And third, it deals with presentation of transaction in such a way that the public in general can understand it and make a careful decision. And last but not the least, disclosure, which indicates that the important things related to transaction need to be disclosed so that public in general and stakeholders in particular can make better decisions. As we all know, necessity is the mother of invention. As we all know, the necessity is the mother of invention. Same is the case of accounting standards. The necessity of accounting standards can be dated back to 1929 of Wall Street crash of 1929, followed by Great Depression. On October 24, 1929, the investors, small and big, started selling their stocks in panic. This led to the downfall of stock market, which led to the loss of 10 to $15 billion. These days is famously called as Black Thursday. To understand the need of anything, we need to imagine how it will be without its existence. So before going on to moving on, I want to tell something about myself. अभी जो भी कहने वाला वो काल्पनिक है, इसका हकीकत से कोई भी नाता नहीं है. So before starting my CA course, I had $1 million business of Burfi Divine, which deals in selling Santra Burfi, the famous Nagpuri Santra Burfi. So I only had one competitor, that is Burfili, run by Mukesh. We both have factory outlets in Nagpur. But everything was going fine. Even we have sponsored one movie, Burfi, if you have seen it. But on April 2018, when everything was fine, earthquake happened and our factory went down. The insurance covered up, but I have a big dilemma. I am a lover of accounting, right? So I have a big dilemma. Whether to record this, whether to disclose this in my financial statements or not, as balance sheet has completed till 31st March, but it has not been approved by Board of Directors. So I had two options. First was not to show it, as it was not the event happening in that financial year. And second, to show it in a financial transaction by showing a provision of equal to loss, so that investors can take better decision. So I decided to go for second option, as investors could take better decision. But on the other hand, Mukesh decided not to do that, and he didn't disclose it in his financial statement. On comparison, investors concluded that Mukesh performance is better than mine. But I want to ask you whether the balance sheet of both our companies were comparable or not. The answer is simple, it was not. This comes to my first point. If there is no AS, investors would not be able to compare financials of different entities, as all would be following their own accounting policies. Coming to the second point, all entities would be doing accounting as per their own fund policies. Now, what is the problem in having their own accounting policies? It will be good as it will be framed as per the needs and requirement of the particular company and the situation. As period goes on, it also gets outdated. But if companies given a chance, they will frame their own accounting policies. Let's say for Tata, which is Tata Group, which is the biggest conglomerate company of India, having products and services in more than 150 countries. But in more than 150 countries. But here is the problem. It is a very time-consuming and expensive process. Plus, with passage of time, these accounting standards, if framed by company, need to be revised, and the same cost will be re-incurred. Coming to the third point, all the entities would be showing profit by deferring the expenditure. If there is a no set standard, every company will start deferring their expenditure and will show profits in current period higher than it is. But in further period, the same profit will same will be shown as loss. Coming to the fourth point, entities would also apply accounting policies as per their need and there would not be any consistency. It's obvious, if left to the company, they will start using those, adopting policies as per their need and as per their requirement. And in the end, they will show the picture which is not a reality. Say, for example, if you have a company and you start in the period of inflation, if stock is valued by FIFO method, the profit will be shown higher. And in case in the period of deflation, if the same stock is valued on the basis of LIFO, the cost will be shown, the profit will be shown higher. So by using this strategy, accountants can maximize the profit and show in the books. But in reality, the same will not be the case. So finally, after understanding why, how problematic will be accounting will be without accounting standard, we finally can tell why there is a need of AS. First, for bringing uniformity in accounting methods. Second, for improving the reliability for financial statements, to simplify accounting information, and to prevent frauds and manipulation. And last but not the least, for the help of auditors, as this accounting standards provides terms and conditions in the form of codes and guidelines, which is used by auditor to audit the financial statements. To conclude, the accounting standards tells how the it is because of accounting standard the financial statement can be near accurate and has quality. Due to accounting standards which big or small entities use big or small entities rely heavily on accounting softwares, and these accounting softwares work smoothly only due to accounting standards. It is like a maths. In maths, how to come to a particular answer, there are multiple methods. But in maths, even after using multiple methods, we will get the same answer. Same is not applicable to accounting, where different approach can give different answer. So thus, there is a requirement of accounting standards. Thank you.
Thank you, Mr. Yash.
We would now like to introduce Ms. Khushi Vyas, our third presenter of the session. She has acquired the 44th All India rank in CA Foundation. She is not only a CA finalist but has also cleared her CS executive exam. She is an avid reader, loves traveling, and actively participates in elocutions, debates, and public speaking. We would like to invite her to present a research paper on the topic, Are accounting standards really required?
Those of you who have decided to delay their lunch and stay here, this session is going to be worthwhile. So stay focused. Do you want to prepare financial statements without using accounting standards? Then before that, take your vehicle and try reaching your destination after removing all traffic lights and policemen off the road. There will be a jam within minutes. Just like the traffic controls creates a road discipline, the accounting standards creates a reporting discipline. Good afternoon, everyone. Myself, Khushi Vyas from the Smart City, Surat. And I'm here to present on the topic, Are accounting standards really required? We all know that accounting standards are set of policies or a broad guidelines regarding the methods and principles to be chosen out of the several alternatives available. Accounting is considered as the language of business, and every language has its own set of grammatical rules. And in case of accounting, these rules are known as accounting standards. But I have a question. When we have 10 accounting principles, then why do we need 32 accounting standards? To explain these terms, I have an example. I bought an embroidery machine for my textile mill at Surat. Now, how do I account it? To take some guidelines, I checked my accounting principles. And as per the matching concept of accounting, this machine should not be expensed off in the current period's profit and loss account, and instead, it should be capitalized. Kitna simple tha. Khatam ho gaya. But as soon as I asked my accountant to record this transaction, he started asking some weird questions. There was a handling cost relating to the machine. Should I include this expense in the cost of the machine? And what about the interest on the loan that I borrowed to purchase this machine? Should I include that cost as well? And this is where the accounting standards comes into picture. The AS10, property, plant, equipment, lists the expenses which are allowed to be capitalized in the cost of an asset. The AS16, borrowing cost, specifies the period of interest that should be capitalized. And this is how the accounting standards shows a standardized way of dealing with various transactions which could otherwise be accounted through multiple approaches. याद करो वो 11th and 12th standard के दिन. Accounting was so simple. Debit what comes in and credit what goes out. Then why organizations are paying crores of rupees to their employees and consultants to comply with these accounting standards? And why around 85% of the world has already adopted the Global Financial Reporting Standards, the IFRS? The reason lies in the benefits that comes with its application. Here are the 3 most important benefits of accounting standard. The first one, it facilitates comparability. The most important objective of accounting standards is to make it easier for the stakeholders to compare and contrast the financial performance of various entities belonging to the same industry and across different industries. For example, I want to compare the profitability of a firm who follows IFRS with another firm who follows the same standard. I can do so regardless of the fact that one is in India and the other one is somewhere in Dubai. In simple words, accounting standards helps us to compare apples with apples instead of comparing apples with mangoes and complaining about the prior being less sweeter than the later. The second one is transparency. The government authorities like SEBI can enforce these accounting standards on the listed companies to ensure transparency in their financial statements. These entities have a wide public interest, and even a minimal amount of manipulation in their accounts can affect the wealth of thousands of people. Even the government's income tax assessment is solely based on the books of accounts prepared by the SSE. And when they are AS compliant, the tax officers can easily rely on them. The third one, it prevents bad loans. Do you know that India has the worst bad loan ratio in the world after Italy? And the major reason for the increasing amount of bad loans in India is the manipulated accounts of the organizations. And if the companies can manage to window dress their accounts even after such stringent application of accounting standards, then one can only imagine the wild scenario without accounting standards. It would be fair enough to discuss the limitations of accounting standards before answering the question as to whether the accounting standards are really required or not. The first one is inflexibility and rigidity. Accounting standards, every company has to follow the same set of policies constantly. And that's why the companies tries to fit themselves into the same set of accounting standards. But every company is different. They have different financial transactions, different situations, and it is not always possible for them to follow the same accounting standards. The second one is the cost. It requires huge amount of cost to implement accounting standards, and especially the global standards. The companies had to change their processes completely. They have to update their systems, and they have to train their employees, and they have to constantly monitor that whether their employees are correctly following the standards or not. And all of this involves a huge amount of cost. The third one is the restricted scope. Accounting standards has to be followed in accordance with the prevailing laws and statutes. And the standards cannot override the statutes. And due to this fact, sometimes it restricts and limits its scope. Even after discussing the limitations, we cannot ignore the fact that no law is without a flaw. And we cannot ignore the countless benefits that a law provides against the few limitations. Now, if you are still not convinced that why accounting standards are really required, then I have a case study for you. And I assure you that after this case study, there will be no room for any doubt in your mind that accounting standards are not just a set of rules, but an inseparable part of financial reporting. How many of you are aware of the FTX crypto exchange? Okay, many of you here, because FTX was once world's third largest crypto exchange. I use the past tense because the company has recently filed for its bankruptcy protection in November 2022 itself. And the impact was massive. The company, which was once valued at $32 billion, now had $8 billion debt outstanding. The bankruptcy completely shook the crypto market, which lost billions in value, dropping below 1 trillion. But surprisingly, the company had just passed its US GAAP audit. That means no accounting standards were violated by it. Then what caused the gap between assets and liabilities, which the Bloomberg reports could be more than $6 billion? Ladies and gentlemen, the FTX meltdown mystery centers on a financial reporting black hole. As crypto is a relatively new concept, there were no formal rules as to its accounting. Taking advantage of it, the company, instead of recording their assets, the crypto assets, as a security like shares, started treating them like intangible asset. And those of you who are aware of the standards knows that intangible assets are required to be recorded at cost. Now imagine the volatile crypto assets whose value had plunged from $23 to $8 in just a month being recorded at cost instead of fair value. The US GAAP authorities were already considering to mandate the fair valuation for the crypto assets. Had this rule already been in place, the company had to record their crypto assets at the declining fair value, and the increasing amount of the increasing valuation of their assets would have been probable to the shareholders instantly, and it could have saved their wealth from getting deteriorated. I think, to conclude, I have made my stand pretty clear. As a business owner, you understand that accounting has to be accurate. But you may not know that why accounting standards are such a big deal. But the thing is, if you were the only person who ever needed to see your accounts, there wouldn't be a need for accounting standards. It is because of the investors and stakeholders who also needs to go through your ledgers. And when you follow accounting standards, it keeps the investors, regulators, and business owners on the same page. Thank you so much. You have been a lovely audience. This is Khushi Vyas signing off.
Thank you, Ms. Khushi. That was very insightful, and it was definitely worthwhile. We now invite the esteemed CA Ashish Khandelwal to give his concluding remarks.
First of all, thank you for having invited me here. It's been an awesome experience. 1800 plus registrations and counting, as Pritesh tells me. It's been a fantastic day for me to see such young guns blazing away in full glory over here. My congratulations to all the presenters. You have been phenomenal. Yes, there are glitches when one presents a paper, when one stands in front of an audience, and take it in your stride. Hota hai. Why were accounting standards made? Why cash system of accounting? Why accrual system of accounting? If accounting standards were not there, what would happen? All of us are living in a world which is extremely fast-paced. You don't have more than 2 minutes to look at whatever comes in front of you. So unless there is a definitive standard for all information that needs to be presented, it is going to be very difficult to compare two entities or two reporting financial statements together to make a decision. These standards will keep evolving. If any of you all have read Chanakya's Arthashastra, the great Kautilya, even at that time, had thought about accounting, standards, checks and balances, how it needs to be reported, how it needs to be interpreted, just so that the kingdom can run smoothly. The world is a global stage. We don't know who's sitting in India and doing work for an entity located in the Far East or in the Far West, but the same set of investors are investing in the company in the Far West and the company in the Far East and in their own business. To check where do I stand, you need a level playing field. And this is what consistent accounting principles and accounting standards would provide to the readers. All I would say is that I can see that we have a brilliant set of youngsters who are willing to step into the shoes of a presenter, make a paper book, give their own views, great analogies drawn from films. I am really happy to see that the profession is moving at a pace which is being powered by this young generation. Thank you once again. It's been a pleasure being here.
Thank you so much, sir. We invite our respected CA Pritesh Manoj, sir, to felicitate CA Ashish Khandelwal, sir.
We now invite Mr. Sumit Jain, a member coordinator, to felicitate the paper presenters. We would like Mr. Taha Merchant to propose his vote of thanks.
Thank you. I would like to first thank Mr. Pritesh sir, Khandelwal sir, and all the jury members, judges, everyone, and all the loving audience. This program is of your program. You are our people. This program is your program. Okay. So we first would like to thank you all for patiently listening, and you are the main conference pillars. Okay. Further, I would like to main ये conferences का purpose क्या होता है? So it would be defined from a simple quote. It says, "I may not be the most important person in your life, but I hope when you hear my name, just smile and say, 'That's my friend. That's my friend.'" So this shows networking का power. Okay, so these conferences are meant for such things which ICA organizes. Coming to the formal vote of thanks. I would, you all people stayed here and skipped lunch. Now we would also go for lunch. So I would like to end with the quote. It says, "Goodbyes are not forever. Goodbyes are not the end. They simply mean Pune Vikasa will miss you until we meet again after the lunch." Thank you. Thank you.
On that note, we conclude our second technical session of the day. And it is finally the time for the most awaited lunch break.